Hello, welcome back to the 30s Guide to Life. My name is Priska Jordan, and in today's special episode of the Personal Finance series, I have joining me a very special guest. He is my CFO and also my hubby. This is Russell Jordan. We've been married for 4.5 years and we both have finance degrees, so we talk this nerdy language all of the time. If you're ready to learn about the 5 investment opportunities that are most likely to come your way and the pros and cons of each, then stay tuned. Currency. Russell, tell us a little bit about cryptocurrency.
There's tremendous upside, much more than you can get in any other asset class that we're going to talk about. So the con here is that if you get into investing in precious metals, you want to invest in the physical metal itself.
So you're in your 30s and you're thinking it might be time to start investing for the future, but I have great news for you. You already own an investment. It's already in your wallet, and that is cold, hard cash. You might not think of it as an investment, but it actually is. So to tell us more about the pro of cash, Russell, take it away.
All right, so I'm going to give actually 2 pros for cash. The first one is that it provides a nominally stabilizing factor to your overall portfolio.
Nominally stabilizing factor.
So what I mean by that is just markets move up, markets move down, and cash can act as a stabilizing force when markets get volatile. So take, for example, 2 different people. Person A has a portfolio 100% in stocks, let's say. Person B has 50% stocks, 50% cash. Now, let's say the stock market declines 20%. Well, person A's portfolio just took a 20% dive. Person B, because they have 50% cash and only 50% stocks, only suffered a 10% drawdown.
Oh, okay.
Now it works in the reverse as well. So let's say the stock market went up, person A would have a 20% positive return, person B would only be up 10%. So you can see how it acts as a nominally stabilizing factor in portfolio, and you'll see why when we get to the cons, I'm using the term nominally. So that's the first pro for cash as an investment opportunity. The second is optionality. As we just discussed, all markets move through cycles. So when the inevitable down cycle comes into an asset class that you like, say stocks, say real estate, having that cash gives you the opportunity to go in and take advantage of that undervalued asset. Whereas if you didn't have it, you would have to watch that opportunity come and go and you'd miss out.
Okay, that makes sense. Because I've been married to this guy for a while now, I already know the con. The con is that cash has a negative return. And that means that over time with inflation, the value of your cash is actually going down. Even if you have, $100 in your wallet, the value of that 100 years from now is much less than it is today. And if you don't believe me, let me give you this example. Our grandparents talk about how when they were children, they could get a hamburger for a dime and a Coca-Cola for a nickel. I saw a nickel on the sidewalk the other day and I didn't even bend over to pick it up because nowadays I can't get anything for a nickel. So that explains the first investment opportunity that you didn't even know you were already invested in, cash. The second investment opportunity is one that you might already be invested in as well, and that is stocks and bonds, or the stock market, Wall Street. Now, you might be invested in stocks and bonds, whether directly in the market or through mutual funds or through a retirement plan like a 401k, which puts you at a financial advantage because you have lots of time left in your life. A lot of people don't end up investing in the stock market until their 40s and 50s, and they don't get that advantage. So great for you if you're doing that. Now, the pro to investing in the stock market is that it is really easy. I grew up around someone who was really into the stock market, and when I was 14, I was allowed to buy my first stock purchase. I bought 2 stocks of IBM. I think I bought them for around $70, and unfortunately I sold them a couple years later for about $140 because I wanted a new outfit. But if I would have kept that, then that probably would have been worth a lot more money now because that was 15 years ago. However, there are cons to every market. So what are the cons to investing in the stock market?
The con for me is really that lack of potential upside, right? Since it's so easy to get into, so many people have access to it, there's not a tremendous upside potential, and so it's just boring.
Some people, if you are a low risk person, then boring would be a pro,
Exactly.
But for Russell, it's a con.
The con really depends on your perspective.
Yeah, so moving right along, the hot topic investment opportunity is number 3, which is cryptocurrency. Russell, tell us a little bit about cryptocurrency.
So previously I referred to the stock and bond market as kind of finance 1.0, just kind of the boring old finance model. Whereas I view cryptocurrency as finance 2.0, kind of where we're moving to. Making it much, much more exciting than the stock and the bond market. And with it being such a new asset class, it's still very much under-owned, kind of known about. Therefore, it has an extremely high asymmetric return opportunity. And what that really means is, it's just that there's tremendous upside, much more than you can get in any other asset class that we're going to talk about. The biggest pro, I would say here for cryptocurrency is just that it's early in finance 2.0. There's a tremendous upside.
Okay, that makes sense. Now, with all of that being a pro, that it is high risk, high reward, what is the con?
Well, you just hit on it. It's that it's extremely high risk. So,
okay.
And with high reward comes high risk. That's something that if you dip your toes into, only dip your toes into it. Don't go into it too heavily or anything. So kind of to go back to a similar example that I used when we were talking about cash. If you take two investors, investor A has 95% of its investable assets, let's say in stocks, and 5% in, let's say, Bitcoin. Investor B has 50% in stocks and 50% in Bitcoin. So let's take scenario 1 where, let's say, stock market had a 0% return. It was flat for the year, and Bitcoin went to 0. Investor A had just a negative 5% return, right? Because it was 5% of their total portfolio. Investor B in that scenario had a 50% loss because they were 50-50, 50% stocks, 50% crypto or Bitcoin. So let's say scenario 2, stock market stays the same again, but let's say Bitcoin goes up by 100% in that year, which has been pretty normal. In fact, that's low, but let's just say 100%, right? Investor A in that scenario made 5% total return, right? Investor B made, what would that be? That would be a 50% return. So you can see, because of the volatility, it's probably wise to keep a really small allocation, say 5%, rather than a large allocation, say 50%, just because it's really hard to stomach that level of volatility.
So if someone watching this wants to start learning about the cryptocurrency market, what resources are there? Do they go to CNBC? Do they go to Forbes? How do they learn about that?
I would say want out, YouTube, which is the answer for just about everything now, all forms of knowledge. So if you just want to start out and you're curious, I would say start there, and then from there you might move on to other things, books, podcasts, and things. But pretty much everything you need to know is on YouTube.
Sounds good. So let's move on to investment opportunity number 4 for you, which is one that you also might already be invested in, and that is real estate. Tell us about what are the pros of investing in real estate.
So I'll give you 2 pros for this one as well. And the first one is that you can get tremendous leverage by investing in real estate.
What does that mean?
Yeah, so what that means is whenever you go and buy a house, most people who've done this know that typically you're only putting anywhere from 3.5% to 20% down as your down payment. So let's take a $100,000 house. Let's say you do a 5% down payment. So you put $5,000 down. Fast forward 3 years and the house has appreciated by 10%. So now the house is worth $110,000 and you want to go sell it, which is not crazy. In fact, in recent times, that's probably low. So your loan started out at $95,000, remember, because you purchased it for $100, you put 5 down, so $95,000. You've paid it down over those 3 years, but for example, let's say it's still $95,000 and you go to sell the house, so $110,000, got to pay off the loan minus the $95,000, leaves you with $15,000 in cash that you put in your pocket. Now remember, you only put $5,000 in, so you tripled your money.
That's the ROI?
Yeah, so that's
the return on that.
That's a 300% return, even though the house only appreciated by 10%. So that is called leverage. That's the power of leverage. So that is going to be the first pro for real estate, and in my opinion, probably the biggest, because that type of leverage in a historically stable asset class is tremendous for creating wealth. And the second pro I want to give is the tax benefits. You get things like depreciation, and you can just write off certain expenses. And so basically, if it's a rental property, in most cases, you can write off pretty much the vast majority, if not all of your rent. So whatever you're collecting in rent, most likely you're not even gonna have to pay any income tax on that.
That's interesting. So because I've already invested in real estate, I know that the con, or the biggest con, is the maintenance costs. We have owned, 2 houses together now. One of them as a rental property with a tenant in it, and one of them that we personally lived in. That house was 100 years old. It was in Florida, so the humidity, the heat, all of that really affected it. And we spent probably every weekend just doing maintenance. So you have to factor in that you're going to have maintenance costs as part of your investment. It's not like the stock market or cryptocurrency where you put in the money, and if you're just trying to hold it, you walk away until you're ready to take it out, or you just kind of monitor it. Consider that if you're thinking about investing in real estate. Do you really want to be hands-on as an owner maintaining the property, or do you want to pay a pretty sizable fee for a management company to do that for you? Moving on to the fifth investment opportunity you'll probably have in your 30s, if not later in life, and that is businesses. Investing directly in a business, such as if you want to open up a coffee shop, or your friend that you've known forever wants to open up some kind of artist studio. So tell us about what are the pros and cons of investing in a business directly.
To start out, we just talked about real estate, and investing in a business is going to be very similar to investing in real estate, because real estate is basically a specific type of business. So if you were to continue your examples, you could have said, or investing in a new apartment complex that a company is getting ready to develop, right? Because that's a business.
Yeah.
It's a business of renting units for people to live in. So a lot of this is going to be very similar to real estate. In that vein, the pros are going to be tax benefits, right? Because once you start learning about the tax code, you understand that earned income is the most taxed income. And what earned income is just what you get from your paychecks. It's reported on a W-2. But passive income, which is how you would get income structured through a business, is taxed far less. And in fact, there are lots of ways to kind of shield it even more so and pay even less taxes. So just like with real estate, it has tremendous tax benefits. Also, a pro could be just that you get a lot of enjoyment out of it. Maybe that's your passion and you just enjoy that. So those are the big pros that come to mind when I think about investing in a business.
Yeah. Now, I might want to invest in a coffee shop one day. So what would be the con of that?
So the con would be most businesses are going to be very illiquid, meaning time consuming and difficult to sell, right? So say you get in a pinch and you need to liquidate or sell the business. It's not something you can do in a week or even a month in some cases like you can with real estate. So generally, if you go to sell a piece of real estate, a house or whatever, it might take you anywhere from 30 to say 90 days. And the reason why it's relatively quick is because everybody needs a place to live. So there's always demand for housing. But with businesses, that's not necessarily the case. So particularly if you're in a down market, there just may not be anybody out there looking to buy a business. Lack of liquidity is a huge con for owning a business.
That's assuming that everybody doesn't need a double shot latte to wake up in the mornings, but I see what you're saying. It's a con because if you need that money, you can't just pull it out real quick. So those are the 5, and if you tuned in this far, we want to tell you about one more bonus one that is one of Russell's favorite investment opportunities, and that is precious metals. What does that even mean, investing in precious metals?
So by precious metals, generally that's referring to gold and silver, as I like to call God's money. And this is not something that most people will ever invest in over the course of their lives. It's just an unloved, unappreciated asset. but it has a lot of pros. And one of the biggest is drawing back to some of the weaknesses that we were discussing when we were talking about cash. So remember, we said that a pro for cash is that it has a nominally stabilizing factor in it, but it also at the same time has a negative real return. So the purchasing power you lose over time, although nominally it's still $1. Precious metals, on the other hand, kind of act as an insurance against the con of cash. There are thousands of years of recorded history on precious metals because historically gold and silver has been money. So to give an example of how an ounce of gold maintains its purchasing power over time, whereas as we discussed previously, cash does not. Back in Roman times, one of the finest suits of armor you could buy would cost you 1 ounce of gold. Now, several thousand years later, that same 1 ounce of gold will buy you a really fine men's suit.
Okay.
So you can see over that several thousand year period, that ounce of gold actually maintained its purchasing power. Whereas if you could somehow, a dollar didn't exist in Roman times, but let's say it did, I can guarantee you it wouldn't buy the same thing now as it did then. So hopefully now you can see the pro of having an investment in precious metals. It kind of offsets that giant con that cash has.
So the pro is that it acts as insurance against the inflationary market of cash, but I'm assuming there's some kind of con to it, otherwise everybody would have precious metals.
Yeah, so the con here is that you have to store it somewhere, and there's a cost to that.
Can't you just put it in like a safety deposit box at the bank?
So I believe legally you're not supposed to.
Oh.
Although there are private vaulting institutions that are basically just private security deposit boxes that you can put it into, but it's not free. That comes at a cost.
So it sounds like the common denominator with all these different asset classes is that there are pros and cons to each, and you don't want to look at an investment too optimistically and miss the cons. You don't want to look at it too pessimistically and miss the pros. You really want to look at it realistically and decide at this point in time, with the information that I have, am I ready to step into this market, right?
Right.
Wonderful. Well, I hope that you were able to get really helpful information out of this as you step forward in your personal financial journey. Before you leave, will you take a second to hit that like button? It really helps out my video in getting other people to see it. And if you really liked it, share it on Facebook. I'll be back next week with another video on personal finance, and make sure you're subscribed to the channel so that you see that. I want to thank Russell for being our very special guest today. And from us at the 30s Guide to Life, we hope you take care. We'll see you next week. Bye! Guide to Life. Ready to do this?
I'm ready.
Is that cheesy?
So investor A, who had 95% stocks, 5% Bitcoin.
Okay.
And this is not something that very many people have ever touched as an investment.